than when they're investing. I mean, it's much better to have somebody that's going to trade 20 times a day and get all excited about it, just like pulling the handle on a slot machine. That's who you know. You may not say that you'd want that person. You'd like the other kind of person too, maybe, but that's where you make the money. And the degree to which the market got dominated by that is shown on a slide I have here somewhere. Here's on Oxy 1. If you'll put up the Oxy 1, that shows how we bought what became. Well, we bought in 2 weeks, thereabouts, 14% of Occidental Petroleum. And you'll say, well, how can you buy 14% of a company in 2 weeks? And it's more extreme than that. Because if you look at the Occidental proxy, you'll see that the standard names, BlackRock, index funds, State Street index funds, basically, Vanguard index funds, and then one other firm, Dodge & Cox. If you take those 4 entities, and they're not going to buy and sell stock. They may have got their own little rules. So they own 40% of the company, roughly. Those 4 firms, and they didn't do anything during this period. So now you're down to 60% of the Occidental Petroleum Company that's even available for sale. Now, Occidental's been around for years and years and years, big company and all kinds of things. And with 60% of the stock outstanding, I go in and tell Mark Millard, this fellow that is 30 feet away from me or so, and I say in the morning to him, buy 20% and take blocks or whatever it may be. And in 2 weeks, he buys 14% out of 60%. That's not investment. I mean, you're not buying from investment. I find it just incredible. You wouldn't be able to do that with Berkshire. I mean, you can't literally buy. You can say you want to buy 14% of the company. It's going to take you a long, long time. But overwhelmingly, large companies in America, well, all of them, they became poker chips, and people were buying and selling like 3-day calls or 2-day calls, and the more times people pull the handle on the machine, the more money the machine makes. I mean, it's very clear, and overwhelmingly, I mean, where did people go? The investors just were sitting around, and there weren't very many, and the money was being made essentially by a bunch of people gambling on things, and that enabled us in a 2-week period to buy 14% of a business that's been around for decades. And you imagine trying to buy 14% of the farms in 2 weeks in this country, or 14% of the apartment houses, or 14% of the auto dealerships, or just anything, when already 40% were locked up some other place. It defies anything that Charlie and I have seen, and we've seen a lot. But I've never seen that percentage of the American public. Essentially, it was a gambling parlor, and the people that were making money were people that worked with gamblers, and then it declined very significantly. A few weeks ago, you can feel it if you're around it. So when somebody asks a very good question, is why weren't you doing anything on February 20th, and why were you doing it on starting well, in the case of Occidental, on February 28th, you know, it's because things developed in a way, and in the case of Occidental specifically, they'd had an analyst presentation of some, I don't know whether it was a quarterly one or what it was exactly, but I read it over a weekend, and that was the weekend when the annual report came out. I read it over a weekend, and what Vicki Hollop was saying ain't nothing but sense. And I decided that it was a good place to put Berkshire's money, and then I found out in the ensuing 2 weeks, it was there in black and white. There was nothing mysterious about it, but Vicki was saying what the company had gone through and where it was now and what they plan to do with the money, and she'll do what she says. She doesn't know the price of oil next year. Nobody does, but we decided it made sense, and 2 weeks later we had 14% of the company, and we also already had a preferred stock and warrants. And the story of the preferred stock is we paid $10 billion. Preferred stock and warrants, we paid $10 billion for it. And at the end of the March quarter of 2020, we valued that $10 billion for our 10Q. We valued it at $5.5 billion. So we had a $4.5 billion loss, and it would have, the world changed. Oil sold for minus $37 a barrel one day, and now it's quite apparent, I think, that we're very happy. We should be very happy that we can produce 11 million barrels a day or something of the sort in the United States, rather than being able to produce none and having to find 11 million barrels a day somewhere else in the world to take care of keeping the American industrial machine working. Charlie, have you got any comments on that as to how something this crazy could have happened?
Well, it happened. It's almost a mania of speculation that we now have. We have computers with algorithms trading against other computers. We got people who know nothing about stocks being advised by stockbrokers who know even less.
I understand the commissions, though.
Yeah, it's just an incredible, crazy situation. And it's weird that we ever got a system where all this equivalent of casino activity is all mixed up with a lot of legitimate long-term investment. I don't think any wise country would have wanted this outcome. Why would you want your country's stocks to trade on a casino basis to people who are just like the people who play craps and roulette in the casino? I think it's crazy, but it happened, and it's respectable. Not with me, but with other people.
Yeah. Well, and look at what the country. I mean, they formed the New York Stock Exchange in 1792 under a buttonwood tree, and it really didn't seem like that was the eureka moment in America. But just look at what's happened using the system for less than, 3 of my lifetimes. I mean, it's unbelievable. So it's worked. Now, maybe it's worked in spite of itself, maybe with the country, but one way or another, America has worked in an incredible manner. Nobody could have dreamt it. Nobody. They'd have hauled you away if you said, in 3 lifetimes, that this place where we're meeting. I mean, it became a state in 1867, but 1789, it asked Ben Franklin or somebody that was walking out of the constitutional convention, is what do you think the prospects are for Nebraska? It's unbelievable what's been accomplished, and it's been accomplished. The people who encourage the gambling, they would like to say it's been accomplished because of we've got these liquid markets and all these wonderful things. Charlie would probably say it's in spite of that. Who knows? But the answer is that well, there isn't an answer. My wife, when they got married, April 19th, 1952, we got in my aunt's car. And we started driving west, and we ended up, well, drove all over the West, but one night we ended up in Las Vegas. And there were three fellows out there. Eddie Barrick and Sam Zigman and Jackie Gone. And all three of these guys were from Omaha. And they'd bought little pieces of the Flamingo. Bugsy Signal had his career ended rather abruptly a few years earlier.
Bad bullet.
It was a stray bullet, undoubtedly. But in fact, there were probably 5 or 6 stray bullets. But in any event, Bugsy was gone, and some people, including 3 guys from Omaha, were in the group. Sam Zigman lived about 2 blocks from where I live now, and he was Stan Lipsey's uncle. Stan Lipsey ran, those of you who follow Berkshire, ran the Buffalo News and a partner for 40 or 50. Expensive, probably on a per mile basis adjusted. And they've gone to great lengths to come out to do something that was mathematically unintelligent. And they knew it was unintelligent. And I mean, they couldn't do it fast enough in terms of rolling the dice, and trying to determine whether they were hot or whatever they may be. And I looked around at that group. Everybody there knew that they were doing something that was mathematically dumb, and they'd come thousands of miles to do it. And they were, and I said to my wife, I said, I'm going to get rich. I mean, how can you miss? If people are willing to do this, this is a land of opportunity. Well, it's the way it still is. And the Flamingo go to be much bigger, and in Omaha, we're very proud of Jackie and things he did. He only died a year or two ago. He became sort of the leader, a spiritual leader of Vegas. And like I say, Sam Zigman's nephew went on to save my and Charlie's investment that we made in blue chip in the Buffalo News. And, it's a very accidental society that occurs, but there's nothing stranger than what has happened in finance. On the other hand, if you go back, perhaps the greatest chapter ever written on the operation of markets, particularly the stock market, is in a book that probably one of the most famous books in economic history, the General Theory, written by John Maynard Keynes. I think it was 1936. And I don't know whether it's chapter, I think it's chapter 12, but whatever it is, he describes what markets are all about in 1936. And he describes something in beautiful prose that explains why the whole country in March of this year was sitting around trading Occidental in some crazy way that enabled us to buy a quarter of what wasn't owned by four other institutions that weren't going to sell. We were able to buy a quarter of it, and we could have bought a lot more. I mean, you just wondered if there was anybody that really was thinking about investment. Going back to investing, I mean, investing is laying out money now with the hope of getting back more later on. It's really laying out purchasing power now with the hope of getting more purchasing power back. But that's the reason that's the way you learn in the textbooks, that you defer consumption now so you can consume more later on so that you can take care of your family. All these things about how investment takes place. And that is what happens with farms. I mean, somebody buys a farm and they hope to leave it to their kids, or they got it from their parents. And I mean, they don't sit there every day and get quotes 15 times a day and say, I'd like to get a call. I'd like to sell a put on the guy's farm next to me, and you can have a call on mine, and then I'll have something called a straddle or a strangle or whatever it may be. And they go about making the farm worth more money, and they do the same thing if they got an auto dealership, and they do the same thing, if they've got an apartment house, they look for improve it and attract tenants, all those kind of things. And 40 trillion at least, of the ownership of all of the American business. People and treat as poker chips or pulling the handle, and they've got systems set up so that if you want to buy a 3-day call on a stock, you can do it, and they make more money selling you calls than if you buy stocks. So they teach you about calls. Nobody's going around selling calls on farms or anything of the sort, but that's why markets do crazy things, and occasionally Berkshire gets a chance to do something, and it's not because we're smart. It's because the only thing I'd say we qualify on, and sometimes I wonder about that, but I think we're sane. I mean and that's the main requirement in this business. And anybody, Charlie?
Well, I don't think we've ever had anything quite like what we have now in terms of the volumes of pure gambling activity that go on daily, and the people lathering the gamblers up so they can rook them. And it's not pretty. And I don't find it gets any great glory for capitalism or anything anymore than a bunch of people throwing dice at a table. What good does that do the rest of the world?
It's a great way to become rich, though. Just figure out ways to insert yourself into the system somehow. And, jobs to some extent self-select. And many years ago, and I've got all kinds of friends in Wall Street, not as many as I had before I had started talking this way an hour or so ago, but I really do. I mean, people make lots of decisions in life, and the truth is that overall, the American system has worked extremely well. It may be very unfair in many ways, but it has produced incredible difference in the goods and services available to me versus what my grandfather had available. I do not want to go back to pre-air conditioning and people pouring whiskey down me while they drill my teeth or something of the sort. I mean, this is a lot better world, and
I think we've made more because of the crazy gambling. I think it's made it easier for us net over the decades we've been operating.
Well, I mean, we've depended on it.
Yes.
I mean, we depend on mispriced businesses through a mechanism where we're not responsible for the mispricing of them. And overall, we learned something a long time ago that doesn't take a high IQ, doesn't take anything. It just takes the right attitude. We may talk more about that later, but I think we ought to prove that we've got an audience here by going to section 1.
Good morning. My name is Ole Pollem. I live in Hanover, Germany. This is my first time in Omaha. My question is on Berkshire buying entire companies outside the US. There were a few, Iska probably the first one, Louis in Germany. My question is, would you only answer calls from them if you're interested in, or would you proactively approach them if they would like to sell their company?
We actually made a few trips. I think maybe Charlie went on one of them. We tried to stir up interest and all that sort of thing in Berkshire around the world. We probably did that 20 or 25 years ago. During that period that I showed you, that burst of action we had, we probably spent at least $5 billion of that. Yeah, it'd be pretty in the area of $5 billion of it. We bought 3 German securities. We bought 2. We bought 1 Japan. We rounded up on some of the holdings we already had there. We would love to buy it, but they don't think of us as quickly there. I mean, I don't have somebody that's going to send me an email about a company that I've been following for 60 years, and I know I can see him in New York, and I can name a number to him, and if he likes, he can take it to his board and so on. And it just doesn't happen that way. We haven't had that experience in anywhere outside the United States. Now, you can say with 40 trillion here, we should be able to find something here a little closer to home. But we don't have any bias against doing it. There are companies, we'd buy in 10 minutes if we had somebody on the other end that could do business in 10 minutes. It's much more complicated in certain countries than in the United States to purchase businesses, and there's certain rules. But I would say this, we got a call, whatever it was, many years ago on our company in Germany, and actually the two fellows that run it are probably here in the audience. I saw them yesterday, and they're marvelous, and they run the business, and they're as trustworthy as the pictures were up on the movie we showed before the meeting started here. We have so much trouble finding good ideas that we can't afford to ignore any, but they do have to be sizable now. I mean, there really isn't. There isn't a lot of. I love the operation we bought in Germany, and it's just a pleasure to be associated with the people there. I just wish we could add another 0 to all the figures, and it was a much larger deal. It's not going to have an economic impact on Berkshire, but they love it. They care. You can see it. You can feel it, and that's the kind of business we'd like to have, and we're very happy we've got it in Berkshire. But we can't do it one debt of Louis at a time, and we would never sell an operation like that, ever. I'm looking at you, Greg. If we get a call tomorrow, and we could make a deal that involved $10 or $20 billion, it was in Germany or France or Britain or Japan or name a whole group of countries, we'd do it. We bought the interest in the 5 leading trading companies in Japan, a couple of years ago, and I rounded them up a little bit. But I told them originally we weren't going to buy a lot we weren't going to change our positions materially without their okay. So we actually, I think, rounded to 5.85% based on the latest figures we had then of all 5 of them. And that put a good many hundreds of millions or maybe $1 billion or $2 billion to work. So we will, President Kennedy said, well, pay any price, climb any hills, whatever it may be to find businesses. But we actually prefer it when they fall into our lap, like getting a letter from somebody and you hadn't heard from them for a couple of years. And you know what you pay for the business. And you know if the board of directors of that company regards it as attractive, that they'll be happy to buy it. And they know you're going to show up at the closing and that you're not going to pile debt on it or change things or anything. They've got an answer. And then you have to see if they've got the question in their mind is what's the best thing for Allegheny Corp. And in that case, we had $11 billion less at the end of the day or the end of the dinner than we had at the start of the day. So opportunity can be any place. And we do have a terrific operation, for example, in Israel. I mean, just terrific. And it's pretty good size. Would we like to have another one like it? Yeah, I just don't know what the other one is. Charlie?
Well, but think in the scheme of things, imagine buying in $60 billion worth of our own stock. We like the businesses. We like the price we're paying. No overhead, no cost, no nothing. Just more interest in what we already own. Isn't that we're totally wasting our time?
Yeah, and if you look at it, you can read hundreds of thousands, maybe millions of words written on stock repurchases and what this is and what that is and all this kind of thing. It's not very complicated. I mean, if you had a partner in a lemonade stand and they wanted to sell their interest, or 2 partners and one wanted to sell their interest, I mean, and the business had the money to buy it, our little lemonade stand, and they were offering it a price that was good for the other 2 people that are going to remain, you'd buy it. Now, the thing that is fascinating to me is what you can accomplish, and still people don't pay any attention to it. We owned in 1998, this is more than 20 years ago, we owned about 150 million. I don't know whether they've split, whatever it is, if they've split it, split adjusted, but we owned 150 million shares of American Express. I think we bought our last share in 1998 or something like that. Oh, and we then owned 11.2% of the American Express company. Wonderful company. And since then, they've sent us a check every quarter as a dividend. And so we've taken some cash a little bit as they've gone along. And now we own 20% of American Express. That's what's happened because they've repurchased shares. That happens to have worked out extremely well. If they overpaid for the stock and all that, it doesn't solve every problem, but it's a wonderful thing if you've got an asset you like and they take your ownership interest up. And like I say, we've gone from 11.2% to 20%. If you're using your American Express card or whatever it may be, 20% of whatever earnings are attributable to our interest, and they used to be 11.2%, and we've done it without putting up any money. Now, imagine if you owned a farm and you had 640 acres and you farmed it every year and you made a little money on it, and enjoyed farming, and somehow, 20 or so years later, it had turned into 1,100 or 1,200 acres. I mean, you'd say, how long has this been going on? What could possibly be, is this un-American or whatever it may be? I mean, is it, sensible use to meet its cost of capital, blah, 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 blah. And that if you do it at the right price, there's nothing better than buying in your own business. I mentioned, use Apple as an example of how our interest in Apple, every time a company that earns $100 billion a year, it means that our interest in it goes up 0.1%. We've added another 100 million to earnings. Well, it takes a lot of work to have 100 million to earnings. And, in the first quarter, they just reported, they're on a fiscal year, but they just reported their March quarter, and, they earned more money and they had fewer shares outstanding. And we actually bought a little more Apple in the first quarter. So we decided we wanted to own a greater interest. And on top of that, we knew that we would own an even greater interest if they kept buying in their shares, which we didn't have any insider information or anything, but certainly would seem the way to bet. And, we feel better because we bought the shares we bought in the market, and we feel just as good as by the fact they use their cash to buy out some of the other people. It is the simplest thing in the world. And then I read all this stuff. It is unbelievable how people can't figure out something that, if they owned a farm and the guy next to them had a farm, and somehow you were getting more of his farm all the time without putting up any money while you farmed your own farm, that at least if you're using some of the earnings for that, you'd feel very good about it. And have you got any explanation for it, Charlie?
Well, I have another thing that interests me in the present scene. We get all these suggestions from index funds, a letter saying the chairman and the president of the chief executive officer are the same person, and that they have some professor somewhere that thinks that American business would work better if it had a separate, if one could split them in two and have each half work. And to me, it's the most ridiculous criticism I ever heard. Odysseus would come back from winning the battle in Troy and so forth, and some guy was saying, I don't like the way you were holding your spear when you won that battle. It's some guy that's never run any business and doesn't know anything. I don't think too much of this activity.
Well, let's see. Somewhere in here, I may find it at some point. Oh, here it is. We wrote in the annual report that in the third paragraph of a 9-page report, we said, we're going to treat everybody the same. Maybe a crazy concept we have, but we really feel that somebody that gave us their savings in 1960 or 1970 or 1980 and just left them with us and trusted us, we feel that they're entitled to the same sort of respect and attention that somebody that is accumulating like crazy assets under management gets paid based on assets under management, that knows that they just need to have policies that essentially are popular in Washington. The only threat they have really is that Washington sometimes says that you're getting too damn big and we're going to do something about you. So they try to be very sure that they're doing things that people will share. So anyway, I say, well, we're going to treat you all alike. We've got 3 million people or shareholders out there. We're going to treat you all alike. And on March 25th, about a month after I wrote that letter, it's in the third paragraph. You'd think that they would get that far. That they had 101 million B shares. I mean, somebody ought to read to the third paragraph. But anyway, we got a letter and says, we would like to meet with you in advance of Berkshire Hathaway's 2022 annual meeting of shareholders to discuss Berkshire Hathaway's perspective on governance and sustainability. Well, I've written probably more on that that's been honestly written by the guy who runs the company, but why in hell would they think that we should meet with them and not you people all individually that come here? I mean, it's, I grew up in a very, very, very Republican household, but I feel like some raving populist or something. But I just can't imagine. Well, anyway, you've heard it, and somebody gets paid to well, there's a lot of people, I'm sure, in public relations, and they hire advisors because it looks better if they have advisors that tell them whether the chairman and the CEO should be the same person or not, and those people get paid for it, and then they discuss it at the board meeting, and then in the end, believe me, if 90% of Congress for some reason felt it was better to have the chairman and the CEO be the same person, the index funds would not be writing those letters, because all they have to worry about is whether, for some reason, people start wondering why some institution should have 10% of the votes in every major corporation in the country. And I like the idea of index funds, but it is interesting to watch where incentives and bureaucracy and whatever it may be lead people. The guy that wrote me the letter is probably a very nice guy. But that's his job. And well, anyway, they didn't get a special meeting. And you people are here, and we appreciate the fact you're here. Okay, back to Becky.
This question is for Ajit and Greg. It comes from Ben Nall, who's a shareholder of 30 years. He's a Nebraska native, and he says he'll be attending the meeting here today. BNSF and Geico appear to be losing ground to their two primary competitors, Union Pacific and Progressive. Over the past several years, UP's operating ratio has been about 400 basis points better than BNSF's, and Progressive has grown faster while maintaining a lower combined ratio than Geico. On an operating basis, UP's precision scheduled railroading and Progressive's telematics appear to have jumped ahead of the Berkshire businesses. He wants to know what Greg and Ajit are doing to address those business challenges.
Okay. Thank you, Becky. Let me just start by saying, when we think of BNSF, we have an exceptional franchise there and a great business. And we do compete with other railways, and we're very well aware of how they operate, including their operating ratios and the metrics they operate to, and precision railroading, and it's all part of it. But what I would share with is, when I think of BNSF, we start with focusing on our customer, understanding how we can best service them. And yes, we want to do it in an efficient, effective way that delivers great results back to our shareholders. And that will continue to be our focus. So yes, we learn from all the metrics they report and how they operate their rail, and we observe it. But I would put our team up right beside them on any operating day, and we're gonna move our rail cars as well as any other rail company in America, and we're going to do it on behalf of our customers. So we're very proud, but we're not ignoring the fact that there's more to be done, both operationally and for our customers. So we'll continue to see improvement there. We've got a great leadership team there. We've got a great employee group within BNSF. And what I like is we're just going to see long-term improvement there. We have an exceptional intermodal franchise out of the West. It's incredibly valuable to our shareholders long-term, our partners. And that's what our team is focused on, building that franchise out. So couldn't be more proud of where we're at, but we also know we have a journey ahead of us, and we're going to continue to get better and better.
Greg, if we were ever the opportunity, would you trade our operation for theirs?
Never, never. And we love
He knows a lot about it, Phil.
we have a great franchise, and we have a great leadership team running it. So well said, Charlie. Thank you.
And I just, before we go to Ajit, and Greg, was a major partner for 20 years, more or less, since a little over that, since we bought the energy company, and his boss was Dave Sokol, and the two of them, I mean, they knew how to run businesses. I mean, and they, it isn't like we don't read what other numbers are and all that, but we've got the perfect person running, and Katie Farmer, we've got the perfect person running the NSF, and she'll do a great job, and it changing around a railroad in various ways. If you got 1,000 or something miles of own track and all kinds of other, it doesn't count sidings and double tracking, and you've got a lot of things to do from something that they started building a couple of hundred years ago, and you, not quite a couple hundred, and you can't move things around easily, and towns grew. When you came into Omaha in 1862, well, the railroad didn't even go across the river. I mean, even though we'd become a major rail center for the West, or the opening to the West, and we're going to be here 100 years from now. We will be a really vital asset of the country, and it will be a very big part, very important part of Berkshire, and we will take what is an incredible assemblage, I think, of 300 and some railroads or something over time, and the tracks got laid, and the routes laid out. 150 years ago, the world changes, but we have to adapt to it. But you don't put an order out to change 1,000 miles of how it's operated or anything of the sort. So we're running it to have that asset for Berkshire shareholders, and it will redundant to the benefit of the country. And if we do it, well, no matter who ran it, would be important, obviously enormously the country, and the UP will be here and at that time too, and it'll be a better railroad 100 years from now than it is now. But I can't promise you what will happen if we get flooding and something in the next few months. It can wipe out a lot of the plans you have, and disrupt lots of lives, and disrupt lots of shipments. And there are no magic wands in railroading to make great changes. On the other hand, you ought to be working at it every day to make it better. So, I forget how many bridges we have, but some years ago, we were spending $3 or $4 billion a year on capital expenditures. And I said, Matt wrote, I said, this is a lot of money to spend, keeping up a railroad. And then he said, well, we're going to have to do that and more and so on. And I said, I can handle this, but I'm not sure Charlie can. I mean, I have to explain these numbers to him. So the next bridge they built, they called the Charles T. Munger Bridge. So you can actually go see. Our railroad has the Charles T. Munger Bridge because Charlie kind of was asking similar questions 10 years ago. Ajit?
Okay, thank you, Becky. There's no question that the personal automobile insurance business is a very competitive business. Having said that, both Geico and Progressive are two very successful competitors in this segment. Each one of them have their pluses and minuses. But having said that, there's no question that more recently, Progressive has done a much better job than Geico, as you point out, both in terms of margins and in terms of growth rate. There are a number of causes for that, but I think the biggest culprit as far as Geico is concerned, and again, you rightly pointed out, is telematics. Progressive has been on the telematics bandwagon for, I don't know, more than 10 years, probably closer to 20 years. Geico, until recently, wasn't involved in telematics, and it's been only the last 2 years that they've made a very serious effort in terms of using telematics for segmentation and for trying to match rate and risk. It's a long journey, but the journey has started, and the initial results are promising. It'll take a while, but my hope and expectation is that hopefully in the next year or two, Geico will be in a position to catch up with Progressive in terms of telematics. And hopefully that'll then translate into both growth rate and margins.
Charlie, go ahead. It's very interesting. I mean, the auto insurance industry is a fascinating one to study. In that the largest auto insurance company now, and we're talking 2022, and Henry Ford. I mean, it was 1903, or something when cars really got started, and it wasn't too many years after that he was turning out 2 million cars a year. Imagine that, one guy, the 2 million cars a year is a lot of cars. So car insurance became very important after hundreds of years of when people thought about insurance. It was ships at sea and fire, where they had protective societies, and insurance as a product's been around a long time. But auto insurance has been pretty much the same thing since Leo Goodwin started Geico in 1936, and we came along with a good idea and lots of big companies and all that. But the largest auto insurance company in the United States was started over in Illinois by a guy who didn't know anything about insurance particularly. And it's a mutual company. It's not supposed to succeed in capitalism. I mean, if you go to business school, they teach you that only because you have incentives and compensation and all kinds of things can a company succeed. Well, nobody's really gotten rich off State Farm. They've sat there, and they are the largest insurance company. While Leo Goodwin started 80-some years ago, and he probably wanted to get rich, and probably at Progressive, people wanted to get rich, and at Travelers and Aetna, and name off dozens and dozens of companies. And who wins? A mutual company. In terms of present size, they still are the largest company. They have, if you leave out Berkshire, they got the largest net worth by far. I think they've got 140 billion or something like that of net worth. And Progressive has had a very, very, very smart guy running it for a very long period of time. They got very smart people running it now, but they have a net worth that's 1/6 that of what some people over in Illinois that nobody knows the name of have after years of, they've had the time to sell the same product, and they advertise like, hey, we spend $2 billion a year telling people the same thing we've been telling them for 70 or 80 years. The policy doesn't change, but when we get all through, State Farm's still doing more business than anybody, and it shouldn't exist under capitalism. If you went there with a plan to start a State Farm today and have it compete with Progressive, who would put up the capital? I mean, a mutual company that you're not going to get the profits from. It doesn't make any sense at all, except they've got 140 billion or something like that of net worth. And Progressive, I don't know what their net worth is, but it must be somewhere around 20 or so billion. And I haven't looked for a long time. Their net worth in the first, incidentally, I mean, they are very, very, very disciplined in underwriting. And of course, on the investment side, their net worth dropped in the first quarter because they own a lot of bonds. And they say, well, they would, probably everybody in the insurance business would say that, well, we own bonds because that's what people do. And here's half the business where you do what people do, and the other half of the business, you spend all kinds of time trying to analyze in every county and every single way you can segregate and properly rate business and all of that. And basically, Peter Lewis sat in my office 40 years ago, and he's smart as hell. And this guy was clearly going to be a major competitor of Berkshire's, and he knew insurance backwards and forwards and very bright and everything, but he just ignored the investment side. And that was as important as the underwriting side. And it is interesting how organizations function and have what I would say are to some extent blind spots. And of course, Charlie and I know we've got all kinds of blind spots ourselves. So we have to be kind of careful of criticizing other people for having them. But the auto insurance business ought to be studied in business school because it essentially refutes so many of the things they're presently teaching. So that's my suggestion today to business schools. Okay. And thanks, Ajit. Ajit is responsible for adding more value to Berkshire than the total net worth of Progressive. That's not to knock Progressive. I'm just saying one guy. Okay, station 2.
Hello, Warren and Charlie. It is great to see.
we've never figured out insights into the economy. I mean, when I was 11 years old, March 12th, I guess, 1942, March 11th, I bought stock when the Dow was 90, well, it was 101 in the morning. It was 99 at the end of the day, I think. And, now it's 34,000, or maybe it's 1,000 less than it was on Thursday. But I just, it's one decision that it's a good thing to own American business. And if the Harvard endowment had come to see me, and it's 11-year-old, or General Motors pension fund or something, and they say, well, no, but we have to have a balance, and we have to maybe have 60%, and then we have to sit around every 3 months and listen to a bunch of managers. They'd have just done better if they'd just taken some darts and thrown them and just said, we're going to be in America 50 years from now and 100 years from now, and we'll do better in stocks than we will in bonds. It's amazing how hard people make what a simple game it is. But of course, if they told everybody what a simple game it was, then 90% of the income or more of the people that were speaking would disappear. So there's really a little too much of us to expect of human nature that people will explain why they really aren't adding any value to what you can do by yourself, or actually you're, I hate to use the example, but you can't have monkeys throwing darts at the page, and take away the management fees and everything. I'll bet on the monkeys, but I don't consider them a superior species, and I don't want them to move next door instead of my next door neighbor or anything. But that is the way it's just the way it has to be. Charlie, do you have anything cheerful to say?
Well, frequently in the wealth advisory business, the way it used to be, you go to your investment advisor and you say, what should I do to protect myself for the future? And he says, why don't you give me $50,000 of your net worth now? That's my contribution to your future. It's a peculiar business.
Yeah, it's a great place to go rich. It's still, if you have a son or daughter that really wants to make money per point of IQ and per erg of energy and all of that, well, tell them to go to Wall Street. I mean, don't have them enter the priesthood or anything. I mean, if that's what it self-selects, and it always will be the case. I mean, there's no reason to despair about humanity because they behave in their self-interest. They may not actually be behaving in their self-interest over time, but they, are they happy or who the hell knows? But if they just want to make money, people here in the auditorium saw a little session from the Solomon episode, and Jerry Corrigan was then the head of the New York Fed, and that same committee was grilling him, and they said, Mr. Corrigan, they were giving him a hard time, and they said, who was the highest, they said something to this effect, who was the highest paid or guy at Solomon last year? And he said, well, and he named him. And he said, maybe he named him. And he said he got, I forget whether it was 20 million last year. And we're talking 1991 now too. He said, he got 20 million. And the guy says, well, how old is he? And he said, well, I think he's Corrigan's somebody affected. He's 26 or something like that. And then Corrigan couldn't resist saying, and he can't even throw a football. And the truth was, now there's a lot more money in throwing a football now than there used to be. One of my heroes was Ted Williamson. I think he was making $20,000 or $25,000 a year, and just imagine today, some guy that bets 230 or 240, and he makes it to the bigs. I mean, the money flows in, and of course, those people should sit down and thank the fact that the stadium that could hold 30 or 40,000 people and was the source of revenue for the people who paid their paychecks, that stadium went from 30 to 40,000 because somebody first invented television, and they came up with cable television, and they came up with pay and all that sort of thing. And nobody knows the names of those people. But capitalism is very, very, very peculiar in how it dishes out rewards. And for a while, it was better to be in Wall Street than be at 220 or 230 here in the bigs. And it is now reversed because of the development of TV, et cetera. So it's a crazy world. Rewards seem very, 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 very capricious, and they are. And they don't seem to any theologian or even to Charlie and me in our spare time. And the whole thing seems kind of crazy, but it's worked awfully well. And even the people who don't take advantage, get shortchanged by the system, are doing far, far better than if the system hadn't gotten changed. Doesn't mean that you necessarily shouldn't work for change, but you should recognize the limitations of what you can do with humans, I'll put it that way. Okay. Charlie, is there any way you'd like to close the sermon?
Well, I do think we have a very interesting phenomenon I would argue that in a lot of the wealth advisory business, people are charging for skill and delivering closet indexization. In other words, nobody can stand being that different from the crowd in results. They're afraid they'll lose their fees. So everybody does the same thing. It's mildly ridiculous. The world is mildly ridiculous.
Yeah. But as Charlie pointed out in the movie, which only the people here saw, that before we were married, we tried to convince a couple of young women that we were really more attractive than we were. I mean, you can't expect people not to behave with their self-interest, and that was very important. That we didn't disclose all of our weaknesses before the marriage. So,
Warren, we're trying to be a little better.
Yeah,
we may fail a little, and I don't know about you, but I've slightly improved since I was 17.
Yeah, well, that's a really interesting point, because if fortune has just showered you with all kinds of good things, you ought to be a better person in the second half of your life than the first half. I mean, really should not be asking too much of people if they've won the ovarian lottery and all kinds, they're born in the United States and all kinds of good things have happened to them. And you've had a chance to see how stupid you were in all kinds of things you did. Why not have the second half of your life be better than the first half? I mean, and I would say, working from a very low base, but I mean, I'm not nearly, by any intelligence test or ability to do any of that. I haven't learned anything, but you do learn certain things only by interacting with people. And you don't know when you're 2 years old, no matter how much you're picking up all kinds of knowledge from the world. The learning machine that's going on in a 2-year-old's head is just unbelievable. But it's not the same as having 30 or 40 years of experience with actually how the human animal behaves, which is you really, you're learning all the time about it. But that should make you a better person in the second half of your life than the first half. And I would say that if you say you're a better person in the second half, if you've got reason to say it in the first half, forget about the first half. Enjoy the second half. And I think both Charlie and I have had the luxury of living a long time, so we get to play what we would regard as the hopeful and respectable second half. And we have had enough sense to figure out, we figured out what makes us happy, and we've gotten somewhat more sensitive to what can make other people unhappy and all that sort of thing. And I'd rather be judged by the second half of my life than the first half. And so would Charlie.
Yeah, of course.
Okay.
I don't even look at what I did when I was young because it would embarrass me.
Yeah. Okay. Any of you who wish to quiz Charlie on specifics can do so later. Becky.
This question is, there's a two-part question. It's for Warren and Ajit on the first part and for Greg on the second. It comes from Roger Cleffman. He says, several years ago, Mr. Buffett was quoted that a nuclear attack is the greatest risk to Berkshire Hathaway Insurance. Given the present circumstances, what would the fallout be on Berkshire Hathaway Insurance if a nuclear event occurred in the populated world? And then secondly, for Greg, has Berkshire Hathaway Energy suffered any physical or cyber attacks? And irrespective of that, has any special hardening of security been put into place?
Yeah. Well, the first half, every day since August of 1945, every day, and accelerating dramatically when a second large country had the ability to kill millions of people, which has been magnified by an incredible factor. The truth is that there is a risk every day. It's a very, very tiny risk, but as Ajit, anybody at this table could tell you, if you roll, well, they had a pair of dice out of the Desert Inn in Las Vegas for a while under a glass thing, and some guy throwing 32 passes in a row, and I don't know what, maybe the odds are 8 million to 1 against that, or 4 million to 1 against, 4 billion to 1 against it. But if you just keep rolling the dice, everything will happen. I mean, if it get 330 million Americans out tomorrow, every American says heads or tails, and they do it every day. After 10 days, you've got 330,000 of them that have called the flip 10 times in a row. And if you do it 10 more days, you've still got a bunch of people who've done it 20 times in a row. And they really think they have learned how to control the flip. Well, the answer is the world is flipping a coin every day as to whether people who can literally destroy the planet as we know it, will do it. And unfortunately, the major problem is with people that have large stocks of nuclear weapons and ICBMs. When they talk about using tactile nuclear weapons because somebody will be upset because they're losing a war, I mean, does anybody think that somebody's willing to kill, hundreds of thousands of people with tactile weapons? I mean, why do they stop? But if they're it is a dangerous world, and And
But we don't have any way of
no,
protecting
there's no way to
against a big nuclear attack. I know a man who said, I know what I'm going to do if there's a nuclear war. I'm going to crawl under the table and kiss my ass goodbye.
Well, yeah, and Charlie is in charge of loss control at Berkshire. That we have no solution for it,
No, we don't.
and there isn't any solution for it. And it's extraordinary when you think about it. In August of 1939, September 1st, as you all know, Hitler moved into Poland, but nobody really knew that much about it here. I mean, the news you got from the newsreel you went to because the theater was air conditioned, or something. So if I went to the movies, which you wanted to do in the summer because it was air conditioned in August, September 1st in the case of the actual movement into Poland. But there was a few people on the screen and some guy with an authoritative voice telling you the German forces are just moved into Poland, and picture of a few tanks maybe, and it was over in a minute. Now, of course, all day, every day, you see people dying who you very much empathize with, and it could be you instead of them, and it's just so different. But in August of 1939, there was a letter sent to President Roosevelt about a month ahead of time. And why did he get that letter? He got the letter because Hitler was so anti-Semitic, basically. He drove all the Jews that could see it coming out of Germany, and among them were some great scientists. And Leo Szilard, who was obviously from Hungary, but somehow he got driven out. Einstein got driven out. And Leo Szilard lands eventually in the United States. And he writes a letter to tell the President of the United States, Franklin D. Roosevelt, that there's a bunch of uranium moving different ways or whatever it may be. I don't know anything about physics, zero. I don't know what the off and on sign is. But in any event, I know what the letter did, because he writes a letter and says, something big may happen in physics, and America better get to it first. But then he has the problem of, how do I get it to Roosevelt? Leo Szilard, who's he, the President of the United States? So he figures if he gets Einstein to co-sign it, the president will pay attention. And he's right. So he goes and gets Einstein, and the two of them send the letter, and they send it to Roosevelt, and they wouldn't necessarily have been in the United States if it, Hitler had a different, hadn't had the crazy views about Jews, basically. And so anyway, that letter went, and we developed the atom bomb before anybody else did. It was a very, very fortunate development that Leo Szilard and Einstein happened to end up in the United States rather than perhaps be someplace else. Who knows? But the accidents of history, and there's going to be more accidents in connection with atomic weapons. We've come close for various times. I mean, we had geese flying over, somewhere up north, and NORAD gets a crazy signal. And we've had wrong training tapes placed one time we're in the Soviet Union or some, it looks like things are going on, and we can't do anything about it. And that is one risk that Berkshire absolutely has no interest in, even though you can say everybody in the world should have an interest, but it doesn't do us any good. The feeling doesn't do us any good to think about it. So, but that doesn't stop the fact that there are two powers in the world that, through miscalculation of the other's intentions, through all kinds of things, have come close in the past. And Charlie and I lived through the Cuban Missile Crisis, and we knew there was some chance that that weapons of mass destruction would be used. And believe me, there's a lot more bad that can happen. And humanity has not really come up with a counterforce to technology. I mean, live back in the caveman ages. If you were a sociopath or something, you threw a rock at the guy in the next cave, or something. I mean, it was sort of proportional to, and we kept developing, and there was this breakthrough where technology has totally outrun humanity, and we'll see what happens. But so far, so good. And Berkshire does not have an answer, though. There's certain things we don't write policies on because we wouldn't be able to make good on them anyway, if it happened. And everybody would know we wouldn't be able to make good on them. So you have that risk, and there's nothing Berkshire can protect you against. And we've been very lucky so far. Did you ever get any questions in terms of?
In addition to all what Warren has said in terms of the chance of something like this happening, the additional thing that concerns me about a nuclear situation is my lack of ability to really estimate what our real exposure is in the event of a nuclear event. When you're talking about other big exposures we have, earthquake and hurricane and cyber, I can, with some reasonable degree of accuracy, have a point of view in terms of how large our exposures can be and how big our loss can be. When it comes to a nuclear thing, I sort of surrender. It's very difficult for us to estimate how bad can be. Very many different lines of exposures will be affected by it. And even though in almost all our contracts, we try and exclude nuclear as a covered peril, nevertheless, if something like that were to happen, I'm fairly positive that the regulators and the courts will hold it against the insurers, and they'll rewrite the contract and we'll be required to pay. For example, one thing which is already being talked about, we issue what are called fire policies. And these fire policies try and exclude nuclear as a covered peril. But there are several regulators who feel that, gee, if it's a fire policy and if the nuclear attack causes a fire, then how can you exclude fire? And you better include fire. So, debates like that we will have to live with, and it'll be very difficult for the insurance industry to fight back both the regulators and the court systems in terms of what is covered and what is not covered.
And there won't be any regulators or anybody else. So we'll leave it to a million years of reconstruction. Einstein said he said, I know not what the weapons will be for World War III, but I know the weapons for World War IV will be sticks and stones. There's a lot of things. I mean, it just, if you're worried about the effect of nuclear attacks, you got other things to worry about than the value of your Berkshire. I'll put it that way. and what other cheerful things? station,
Warren, you want me to touch on the cyber?
oh yeah, sure.
Yeah, I'll just touch on the cyber because it was raised. And when you do think of Berkshire and they use Berkshire Hathaway Energy as a reference, but cyber risk and managing that risk, both at Berkshire, really falls across all of our subsidiaries. And it's a constant risk that's there. It's one of our greatest risks we're always evaluating and trying to literally defend against. And if we use Berkshire Hathaway Energy as an example, we would receive billions of attacks every day against our various operating systems. So that's basically what our team is in place for. Both they harden the assets to deflect it, and then evaluating the underlying attacks we have, every second of the day. And by the way, that would we'd have a number of operating subsidiaries that experience that, but obviously it's the rail and the energy and a few others that we spend a lot of time on, a lot of effort, a lot of resources. And the good news is that through to today, our teams have done an exceptional job. We really haven't had a significant event. We've had some minor events at small businesses, but across our major businesses, across our major operating systems, we've had the proper security protocol in place to avoid events, but it never stops. Our team would tell you that every day that's a risk they recognize and a risk they're addressing within the businesses. So a significant risk, but a significant priority for all of our operating teams.
Yeah, and I would add one thing. I think Greg knows way more about this than I do, but my impression from everything I've seen is that you always have, historically the private industry has always said the government can't do anything right, and government always says that private industry is just thinking about itself, all these things. The truth is, from everything I've seen, is that the cooperation between government and business in terms of trying to minimize the threat of cyber problems, I think has been magnificent, basically.
Yeah, excellent point. When it comes to cyber, the collaboration between a variety of U.S. agencies and our individual businesses, it's incredibly strong, including down to the certain agencies will submit basically a lot of our operating data on a daily basis, where they're helping us go through it to identify if we have a bad character, a bad individual who's maybe penetrated into our system. So it's a strong collaboration, and Warren, you're absolutely right. It's very unique to see how both the industry and the government's working so closely. But I think we both recognize it as such a significant risk. We have to stay strongly aligned on the approach.
It's a real partnership. It's a real partnership, and we can do better because the government is helping us, and the government can do better because we're helping them, and there's no lack of will on either side. And cyber, I mean, it blows your mind on sort of the nuclear is the number one threat, but it's a very, very, very low probability. Someday the sun will burn out too, but there's really no place for two countries with large ICBM possibilities and who knows what else and everything, but we haven't figured that out yet. It's easy to go around and say this is a solution or that's a solution, but if you have two people with loaded guns facing each other,
And not everybody is likely to be totally rational.
oh, well, we see so much irrationality in where people's self-interest is involved. They're doing all kinds of things to destroy themselves in terms of how they live their lives and everything. And it doesn't stop with as you move up the ladder. And people some people do terrible things, and just very much hope that they aren't in a position where they can do it all by themselves with the rest of the world as their supposed prize. Okay. If Station 3 will please ask something about motherhood and apple pie or something like that.
Dear Mr. Buffett and Mr. Munger, my name is Daphne. I'm from NYC, and this is my 5th annual shareholders meeting.
Well, we appreciate you coming. We do, sincerely.
As you know, for the past 4 consecutive months, we've been going through inflation with an inflation rate north of 7% for the first time since 1982. You both have experienced this before, from 1970 to 1975, at a time where your portfolio took paper losses, and yet you made some of the best investment choices of your life. Reflecting on that, my question is, if you had to pick one stock to bet on,
You kind of snuck up on us there for a second.
and be resilient in the inflation, which would you choose? And what specifically enables that stock to do very well and might very likely be a difficult market?
Well, I'll tell you something even better than that one stock. Maybe we'll get to one stock, but the best thing you can do is to be exceptionally good at something. If you're the best doctor in town, if you're the best lawyer in town, if you're the best whatever it may be, no matter whether people are paying you with $1 zillion or paying you, they're going to give you some of what they produce in exchange for what you deliver. And if you've got it, and if you're the one they pick out to do any particular activity, sing or play baseball or be their lawyer, whatever it may be, whatever abilities you have can't be taken away from you. They can't actually be inflated away from you. Somebody else will give you some of the wheat they produce or the cotton or whatever it may be, and they will trade you for the skill you have. So the best investment by far is anything that develops yourself. And again, not taxed, so that's what I would do.
I got some advice for you too. When you have your own retirement account and your friendly advisor suggests you put all the money into Bitcoin, just say no.
Yeah. Nobody can take away from you the talent you have. I mean, and the truth is that the world will always be willing. They'll need to do something, and some people will not have skills, and they will get less of the product of the society than somebody who has other skills. And sometimes that has something to do with education, but a good bit of the time it doesn't have anything to do with education. I mean, but to figure out what you'd like to be, and figure out how, and what you'd like to be is what you're going to likely be good at. And the world will always need somebody on that tube to tell us what's going on. So, study Becky Quick or somebody and figure out, what makes her good, and what you sort of naturally bring to the game. I mean, I could have. Who's the guy that says you got to spend 10,000 hours doing this or that? And then Malcolm Gladwell, would say just spend 10,000 hours on something. Well, I could have spent 10,000 hours trying to become a heavyweight boxer, but I don't think I'd have felt very good at the end of the 10,000 hours. I mean, you stumble in to what you really like doing what you're good at, what's is useful to society, and then it doesn't make any difference whether the dollar bill, is now worth, in terms of the purchasing power, a cent or a half a cent or a hundredth of a cent. If you're the best doctor in town, they'll bring you chickens, whatever they may do, but they can't take it away from you. And my guess is that if you've come to 5 meetings, you've got a very good future ahead of you. I mean, that shows it. It self-selects. I mean, if you want to sell a piece of yourself, we'll buy that as the best investment we can make. We'll take 10% of your future earnings, and we'll give you a cash payment now, and we'll have a terrific asset. And you can have 100% of your future earnings, and if you make it, develop your talent, maybe you'll be a great dancer. People pay money to watch great dancers. We had Fred Astaire and his sister Adele that came from Omaha. Their name was Austerlitz then, but they could dance. And Adele did whatever she did with it, moved to England, and Fred Astaire went on to do a whole bunch of other things. And Ginger Rogers had to do it all the same backwards in high heels, and she didn't get paid as much because she was a woman. But you're going to do just fine. I bet a lot of money on you. Okay, Becky?
This question is for Warren and Ajit, and it comes from someone named Modi in Israel, who writes, "My family and I are long-term shareholders of Berkshire, and we plan to hold it forever. We like that the current management thinks in the long term to increase shareholder intrinsic value, but we aren't sure that at the time of the management change, the new management will act the same way you do. They might take risks in the insurance field where it's hard to find on the balance sheet, and that might take years to realize. We would like to know how we can assess the insurance risk today and in the future, or to know in time when you and Ajit are not here anymore."
Well, I would say that the future for a long time is about as assured as you can have in the world. We don't have an answer for the nuclear problem or anything, but we have a culture that A, has worked, B, has the shares and the shareholders that will carry it a long way. And the first year, let's say I die tomorrow, the first year, everybody says, what's going to happen? Are they going to spend all? They can do all these things. You've got the shares held in a place that it can't happen. You've got a board of directors that understands that our culture is 99.9% of running the business. They don't think that having meetings of the committees and bringing in outside experts or anything like that mean a thing. I mean, it's a process that the world has adopted, and they've done it for reasons we understand. But Berkshire is just plain different. We are a business that exists for people that trust us. And all we have to do to fulfill that trust is fairly simple things. We've got the people to do it. We've got unbelievable resources to do it. And it isn't that difficult as long as you've got the freedom, essentially, to do it. And the world will write stories a year after, so a year later, what has happened at Berkshire? The railroad will be run the same way. The big worry, of course, is that somebody comes in and figures they can make billions as a group, or people that sell the businesses and say it's better to be private, because, or it's better to be pure this or something like that. Well, we're a pure partnership. Is what we're pure at, and we do have what we think is a special relationship with our owners, and I don't think the relationship changes, and the ownership doesn't change that much. And truth is, nobody can take us over for a long, long time. And by that point, we would hope that maybe the superiority of this culture might be somewhat better understood. by the world, and we will be here. If we have the same culture, we'll be here 100 years from now, assuming we haven't had nuclear exchange or something. But Berkshire is built to forever. There is no finish point. Nobody's waiting to retire or have their options vested or thinking about. We don't have anybody that's thinking about, should I take another job? It just doesn't. They're doing what they want to do in life, and it isn't because we're topping somebody else's offer, or that headhunters come around and say, we want this person or that person, and what will it take to get them? Well, they can't get them. I mean, now it's. I don't know whether we could build it again, but we've got it, and we didn't know we were building it exactly when we took over. When we had a lousy textile mill. I mean, it isn't like Charlie and I sat down. He didn't happen to be in Berkshire, but he was my partner and everything. And so we were mental partners. We didn't sit down and work out some plan that said, well, we'll run the dumb textile business for 20 years and then we'll finally have to fold it. And then we'll do this and that and everything. We just kept putting one foot in front of the other. But we did know how we felt about running a public company. And one thing we wanted to do always was we wanted to have people that were in sync with us. We didn't really want that group I saw in the Flamingo, in 1952. We wanted people who trusted us. And we started, in my case, in a partnership. We started with 7. Charlie started a partnership. And this is the same thing. We didn't go to institutions, and we didn't pay fees to people to bring in money or anything like that. We sat down with people. In my case, I handed them a little sheet of paper, and it said the ground rules. And I wanted to be sure we were on the same page. I said, you don't have to read the partnership agreement. I mean, there's no way in the world I would be taking advantage of it. You shouldn't be here if you think I did. But I do want you to be on the same page and measuring me by the same yardsticks I measure myself. And those people stayed with me, and they're still, sure, they're their children, their children's children, they're shareholders of Berkshire, but they're partners. And it'd be hard to do that again, but I would do it with whatever. If I were going to be in this field, I would try and do the same thing. I would try to find people that trusted me. And I don't want to be with people that are saying, how'd you do versus the S&P, last month, or, what's your long short position or anything like that. I sold securities for 3 years, and I just didn't want to be in that position where essentially they thought maybe that I could do things that I couldn't do. So I finally found a way to get a few people. I mean, I didn't actually stumble into it, but a few people that trusted me, and they just gave me their money, and we've lived happily ever after. So it's the new management's got them. And the management after them, and the management after them, they're just, excuse me, they're just custodians of a culture that's embedded. The owners believe in it. People that work there believe in it. And we're not saying other things can't do better or anything of the sort. We're just saying this is what we've got. And we have got the directors, we've got the share ownership and all of that and the size that essentially can ward off any attempts to change the culture. And, it's silly to talk about if our board members did this and did that, and and in the end, obviously we're always going to follow the law. We're a Delaware company, we follow Delaware law. But that doesn't mean that we have to do what every other Delaware corporation does and how they look at the Delaware statute. We'll follow the law, and then we'll we'll run it as a group of people who trust us, and we appreciate that trust. Charlie?
Well, I remember when you had a textile mill,
God,
and
I tried to forget it.
the textiles are really just congealed electricity the way modern technology works. And the TVA rates were 60% lower than the rates in New England. It was an absolutely hopeless hand, and you had the sense to fold it. Hello?
25 years later.
Well, you didn't pour more money into it.
No, that's right.
And no, recognizing reality when it's really awful and taking appropriate action just involves often just the most elementary good sense. How in the hell can you run a textile mill in New England when your competitors are paying way lower power rates?
And I'll tell you another problem with it too. I mean, the fellow that I put in to run it was a really good guy. I mean, he was 100% honest with me in every way. He was a decent human being, and he knew textiles. And if he'd been a jerk, it would have been a lot easier. I would have probably thought differently about it, but we just stumbled along for a while, and then, you know, we got lucky that Jack Ringwald decided to sell his insurance company, and we did this and that. But I even bought a second textile company in New Hampshire. I mean, I don't know how many, 7 or 8 years later. I mean, I'm going to talk some about dumb decisions. Maybe after lunch we'll do it a little. And it is incredible how many dumb decisions we made. Charlie and I bought that, and Sandy got us. We bought that department store, and that was 1966. And you know, we were working with our own money, and why in the world did we think? And Charlie flew to Baltimore, and I mean, we used to really work in those days. and there again, we had wonderful people. Louis Cohen couldn't have been a better guy, but everybody in that business had a different reference point. You know, they wanted to expand their company. Well, who can blame them for that? And you know, they were planning the couple of new stores, and each department, the shoe department said, well, we'll do it better this time, and all that kind of thing. But the whole idea was crazy. And we got there for a little while, and we figured it out, finally. And
we reversed course.
yeah. But why the hell did we do it in the first place?
Well, because we were stupid.
Yeah, okay, well, that's important to realize. We paid $6 a share for that stock. And if the department store has succeeded, it might be worth, you know, $30 a share now. And it failed, so but we did other things, and we merged it into Berkshire, and we'll talk about that a little later. And, you know, I don't know whether it's $150,000 a share now or something like that from the $6. So if it succeeded, we would have maybe made a few dollars, and because it failed, we made hundreds of thousands of dollars per share. But that's the way life is. You just keep going. And
keep learning. That's the secret.
Keep learning.
Keep learning.
Keep learning. And you can say, why would it take guys that long to learn? And well, we got a few minutes before lunch. Let's address that problem, because I did bring something along on that. There have been, well, I started buying stocks when I was 11. I've been reading every book in the library on it. I loved it. My dad, you know, it was his business, and I get to go down to his office and I read the books down there, and I save the money. And finally, by the time I was 11, I could buy a stock, and I could tell you at that time, I went to New York Stock Exchange when I was 9. My dad took us to New York, each kid to New York once. And he took me. I went to the New York Stock Exchange, and I was in awe of it. I could tell you how the specialist system worked and the odd lot arrangements, and I could tell you history of finance and all of these things. And then I got very interested in technical analysis and charted stocks and did all kinds of crazy things, hours and hours and hours, and saved money to buy other stocks and tried shorting and I just did everything. And then when I was either 19 or 20, and I can't remember exactly where I did it or something, I picked up a book someplace. It wasn't a textbook at school, but it was in Lincoln, Nebraska. And I looked at this book and I saw one paragraph and it told me I'd been doing everything wrong. I just had the whole approach wrong. I thought I was in the business of trying to pick stocks that would go up. And in one paragraph, I saw that was totally foolish, and I left. I brought something that it's really interesting. Let's put up. What do we call this chart? Don't think we. Oh, here we are. Yeah. Let's put up illusion 1. Done. Yeah, there we have it. Now if you look at that, some people will see two faces. Some people will see a base. And some people will look a long time and only see two faces. But the mind flips from one side to another. And that's, there's some name for it that they call it ambiguous illusions or something of the sort. There's other things that talk about aha moments or in the old comic strips with Popeye, Wimpy would have a little balloon over his head and the light bulb would go on. There's this point where all of a sudden you see something you haven't seen. Well, it took me, I had an illusion that I was looking at, we'll say in that one, two phases. Let's go to the one labeled 2. And if you're looking at it from one side, it looks like a rabbit, and if you look the other way, it looks like you're looking at a duck. And the mind is a very funny place, and I think people call it an apperceptive mass when you have all kinds of things going on in your mind, and they go on for years, and they sit there and get lost, and then all of a sudden, you see something different than what you were seeing before. Now, and it took me in stocks, which I was intensely interested in. I had a decent IQ, and I was reading and thinking, and it was important to me to make some money on it. I had every motivation in the world. And then I read a paragraph, actually, in chapter 8, I think it was, of The Intelligent Investor. And it told me that I wasn't looking at the duck, I was looking, now it was the rabbit, whatever it may be. And whether you call it a light bulb, whether you call it, a moment of truth, whatever it may be. And that happened to me in Lincoln. I mean, it changed my life. If I hadn't read that book, I don't know how long I would have gone on looking for head and shoulders formations and 200-day moving averages and the odd-lot ratios and a zillion things. And I love that kind of stuff. Except it was the wrong stuff I was looking at. And I've had that happen, and Charlie's had it happen, I'm sure. It happens a few times in your life. And all of a sudden, you see something important that, why in the hell didn't I see this in the first place? Maybe it's a week ago, maybe it's a year ago, maybe it's 5 years ago, maybe it's learning how to get along with people. Whether actually it's better to be kind or not, or whether, I mean, they're just learning how to have, if you want the world to love you, what you have to do, or what, it's, you know what, when you see it, but you didn't see it for 10 years before. And I don't know whether Charlie's got some thoughts on that or not, but that's happened in a few situations in business where I've looked at a company for a decade, and then there's something that just all gets rearranged in your mind, and you can say, well, why didn't I see this 5 years ago? But usually, I've had it happen a few times, obviously, and everybody here has, and just in different areas of their lives. And you think, how could I have been so stupid? Well, that's what Charlie's, when he was in the law practice, he had a partner, Roy Tolles, and every smart guy that would get in trouble, usually it was guys, and usually it was with women, and they'd come into the office and they'd look, down-faced and everything, and they'd say it seemed like a good idea at the time, I mean, and their lives unraveled, in many cases. So there is that apperceptive mass that's sitting in there inside somehow, and every now and then it produces some insight. It's better actually if it produces insight into your behavior than whether it produces insight to make money. I mean, and some people never get it, and they wonder why whether their kids hate them or whether there's nobody in the world that would give a damn whether they live or die. In fact, they prefer they die because then they've been courting them for their art collection or whatever it may be. It's just, Charlie would say, just write your obituary and reverse engineer it, and not a crazy idea. But Charlie, I don't know, what do you know about apperceptive masses, which are optical illusions?
Well, I know that that's the way the brain works, and that it's easy to get it wrong. And part of the trick is to get so you correct your own mistakes. And we've done a lot of that.
Yeah.
Frequently, way too late.
Yeah, we've done better with the mistakes than we have with the reasonably good ideas.
Well, it's so easy to overdo a good idea. That's what's going on now. You have a lot of good ideas that are being grossly overdone.
Well, just tell me about one that hasn't been, but tell me later when the crowd isn't listening. That's where.
But look what happened to Robin Hood, from its peak to its trough. Wasn't that pretty obvious that something like that was going to happen?
Tell me again what it.
Robin Hood, when it came out and it went public, and
Oh.
it got lured everybody in all the short-term gambling and big commissions and hidden kickbacks and so on and so on. It was disgusting.
Yeah. And it says the last year, and they got mad at you, and they sold a bunch of their stock, and they got the money, and.
Yeah, but now it's unraveling. God is getting just.
But a lot of the insiders have but they've gotten a lot of money from it. I mean, they were big sellers, as I remember.
That may be, but
Yeah.
there's been some justice.
Well, I have to agree with that. Whether it's a good idea to go around making enemies of people, though, that's another question, which we do. Is it wise to criticize people at all?
Probably not, but I can't help it.
Yeah, well, and here's the smartest guy I know, and he's 98 and he hasn't figured it out yet. So give up. Enjoy. Well, with that, we'll go to lunch, and we'll try to come back wiser at 1 o'clock. And thank you. Okay.
That was good.
Welcome back. Becky will rejoin me in a minute, but let's recap some of the big news Warren Buffett, Charlie Munger, and the Berkshire board just made in the morning session, the morning Q&A with shareholders. A lot to say about the markets, the state of the markets. This was a quarter in which Berkshire Hathaway actually turned to some aggressive buying of securities, some $50 billion in growth purchases. Of course, we knew some of that was going to be in Occidental. They've raised their stake in Chevron, and it came about pretty quickly, really, from late February through March. Warren Buffett describing how the market just seemed to surface some values because it had gone from a very speculative phase. I spent a lot of time talking about just how speculative the market had been. A gambling parlor over the prior 2 years is the way that that Buffett put it. And then in the correction, we got the kind of downside of that, and they did manage to, of course, pick up Hewlett-Packard shares as well. Good color also from Warren Buffett about just how he came to acquire Allegheny very quickly. Allegheny Corp for $11.6 billion after he received an email from his former executive at Gen Re, now CEO of Allegheny, saying, hey, read my shareholder letter in my first annual report on Friday. He says, I'll see you in New York very soon thereafter. One dinner, and it became an $11.6 billion deal. Also, a couple of shots at crypto.
This channel is really
from both
about
Charlie
covering
Munger and
market
Warren
news as it
Buffett,
happens,
just
for
describing
those
U.S.
looking to
currency
get
as
some
the only real money in this
operator
country,
experience, coaching,
and Charlie
feedback
Munger
on their
saying, don't
companies.
listen to any wealth advisor,
And just really
any
in general,
investment advisor
we're living
who
in a world
says
of
you
real-time
should buy crypto.
communication.
Another point
CNBC
from Munger
has been streaming
was
this, and
strongly
be able to kind of cover
opposing
things on a
the
regular
shareholder
basis.
proposal.
So please
to
share and
split
like.
the
During the
roles of
week, I do a
chairman and
coverage
CEO.
of
It's one of those corporate
live
governance measures
events.
that is
So
to be voted on. And he
Bloomberg, Emily
basically
Chang
says
does a
that,
Bloomberg technology report
that it's
every
a
2 p.m.
ridiculous idea.
Pacific
is
Standard
Charlie
Time
Munger's
every single
version
day.
of that. We did
And
know that the
I like
board
to come on here and
was
live
going
stream
to
and talk through the market
oppose those
news.
things. So
If
that
you're
was
into stocks, obviously
most of
we're
it
seeing
from
some
the
major
morning session.
upheavals.
Not a whole lot about
again,
the
if you've been
economic
around
outlook. Of course,
since 1999,
interestingly,
you've seen these
Buffett
ups and
reiterating
downs,
that
and
he and Charlie haven't
providing
the faintest
feedback
idea
to folks
of what the
that
market's going to do
are
on
interested
Monday or
in
at any
talking to
time,
someone that has
and that
actually
never
operated
filters
two
into
companies
into their
that have reached
decisions as
100
to what
million
to
in
buy,
revenue,
when to buy
something
it,
that I'm
even
trying
if
to
they tend
provide
to,
as a
in
service.
retrospect,
So
have decent timing.
But
we'll be
I
back
will say, look, their actions speak louder than
live
their
stream the
words this
next
time around. This is
version
what they've always
of
said. The macro
this
doesn't matter. They're
event.
not paying
And if you have any
attention.
questions,
And
comments,
yet,
please put them
there are times
in the
where they
bottom
will
below.
go from
I'm always
spending
interested to
nothing
figure out why,
to spending
what
$40 billion.
what's driving you
those
to
numbers that he put
follow
up
and watch
talking
this.
about
Are you
what
actually
they
an
were
investor in
spending
Berkshire
at the beginning
Hathaway?
of February,
Are you just a
how that
fan
flipped at
of
the end
Warren
of
Buffett?
February into
There
the
is a
middle of
large
March.
book. I
And
don't know if
all
I'll
of a
bring
sudden
it
you
out
had
in the next
days
stream.
where
That
they were
was
putting
produced,
out
I think it's
$4
like
billion,
this
purchasing
big.
$4 billion in stock. So,
Let me just
they tell
change
you that
things here.
because I think part
It
of what
is,
they're doing here
the book
is
is
trying
like
to
this
teach
big,
people
and it
who are not
actually
doing this for their
it
day
tracks
jobs,
every
who are not
transaction
experts
that
in
Berkshire
this,
Hathaway
to
has
kind of
made. I'll
sit
bring the
back
book out
and be
when we stream
slow
for
and steady builders
the
over
next
time.
hour. So
But these guys
everyone's
are
heading to
investors in
lunch.
the business, and
Thanks for
they put
joining.
capital to
We'll
work
be
when they
back
think that there are
probably
shifts in the
in
marketplace, and that can happen on a dime.
hopefully
They've been aware of the existence
hopefully
of Hewlett
maybe 30
Packard as a
minutes.
stock
We'll see
for
what's going on
50
here. I'm
years
going
or
to
something.
turn it back
And they
here
bought it
to
only
the
at this
book.
moment
Right.
when the prices came to them and they felt as if there was an opportunity. It's basically the way they characterize it. It's one by one, not a market call.
And I think what these guys are doing are, Warren kind of talked about this when he was explaining what they've done with shares of Allegheny.
Yes.
I mean, that was a company he said he's been following for decades and decades and decades. And he has 4 file drawers full of all of their annual reports that he reads every time. So they can talk about how they're not doing anything. They're just sitting around reading. Right. It's true, but they are reading every report that comes through, every bit of analysis, and they each read several newspapers a day, probably 4 or 5 newspapers a day. And when you are accumulating that kind of knowledge, it makes you able to decide on a dime that you can plow billions of dollars into something.
As they do, as one person presses the button on those trades, as Warren described.
Yeah, Mark Millard.
Yeah. Well, let's get to CNBC.com, a banking reporter, Hugh Son, at CNBC headquarters. Hugh, at one point, Warren said, I don't know why our subsidiary companies have bank lines. We can give them the money if they need it. We're better than all the banks. And yet, he's owned and still owns a bunch of banks. I mean, what were your maybe principal takeaways from your perspective?
Hey, Mike, a couple of takeaways. One, when you look at their investment in banks, what did he do in sort of the March 2020 timeframe? He basically sold off all of his stakes in JP Morgan, Goldman Sachs, and Wells Fargo, which had been his number one holding a few years earlier. Why is that? And everything that we've seen in terms of the filings so far shows that he hasn't really gone back into the banking sector, with the exception, the very big exception of Bank of America, which is a huge holding at $45 billion. and US Bancorp, which is a lesser holding. So he really wants to focus on US. He wants to focus on the very basic nuts and bolts of retail banking. He wants to stay away from Wall Street activities, and he has a lot of disdain for Wall Street. As we know, in your earlier comments, you guys were talking about how he referred to banks and brokerages turning the markets into a casino and turning big companies into gambling chips, essentially. So we know that he has a certain amount of disdain for Wall Street, and he's actually focusing on U.S. basic retail banking. And what does that tell you? Not a lot of bullish comments today. And I would argue that what he said today, what he didn't say today, was actually more important than what he did. He didn't talk a lot of bullish signs about 2022, 2023 in terms of the economy. Not a lot of bullish indications there. And that's because you don't really want to own banks ahead of a possible recession when defaults will spike. And I think that's one of the headlines that are behind the headlines today.
Right, exactly. It's what's unsaid and what's not done. Maybe is saying a fair bit about the outlook there, or perhaps a lot of commitment to energy right now. It might just seem like the more timely way to move the
Folks, I'm going to end the broadcast, but I'm going to come right back. So I just want to make sure that this was safe for people to be able to rewatch our commentary on today's Berkshire Hathaway AGM 2022. So I'm going to stop the stream and I'll come back. So please subscribe, and you should see the live stream come back in a few seconds here. Thanks so much, everybody. We'll be right back.
And, one other headline I think that we missed here is if you look at, you guys talked about the $41 billion net purchase of stocks, a huge, massive, bet on